Today's webinar topic is money management. So it's no secret that it can be difficult to get access to banking and funding as a cannabis business. So in today's webinar, you will hear from the service providers who will share pathways to get money via loans, cash management, payments, government grants, or through banking relationships. So before we get into it, for those who don't know us, since 2014, Meadow has built a full suite of connected software tools, point of sale, delivery, e-commerce, a robust customer database, plus text marketing, loyalty programs, discounts, and more. We offer superior workflows for retail operators, and our system is simple, intuitive to use, and easy to train both your front and back of the house employees. And best of all, it saves an estimated 20% in labor costs by reducing tedious manual labor. So if you're used to using multiple systems with clunky workflows and you have inventory or sales data that you can't fully trust, we would love to help you upgrade to Meadow's efficient all-in-one system. And most importantly, the dispensary teams who run Meadow really love our platform and our customer service. We hear a lot of reviews about our easy-to-use tools, and your customer data can easily be turned into marketing campaigns. So Meadow is the top-rated cannabis retail POS software on G2, and we really pride ourselves on creating happy partners and offering ongoing support and educational resources like today's workshop, because we really care about this industry and we want to see you thrive. So shout out to all of the Meadow partners here in the room. Our system has really been built over the last 8 years in California based on real world feedback. And we are excited to announce that we are now available in Michigan, as well as Massachusetts and New Jersey. So let's go ahead and get into it. I'm going to hand it over to today's speakers. I'm pleased to introduce David Hua, our CEO and co-founder, who will be moderating today's panel conversation. And I'll let Hua and Eric and GP and Sean introduce themselves.
Thanks, Aria. Hi, everybody. Thanks for joining us today. Topics are really important, so we're just going to get right into it. Going to welcome Sean, John Paulo, and Eric to the webinar. These are operators and people that we've known for a while in this industry. I think from our perspective, a lot of time, trust, but verify is really important. So many of these guys and what they've done with their respective companies have been verified, and hopefully we can give you a lot of information directly from the source and perspective of what we're seeing. In terms of who we have going on, we have Eric from FundCanna. He's the COO there. We have John Paulo from ercTree, and we have Sean Bennett, co-founder and CTO of Stronghold. I'll let each of these guys introduce a little bit more about their background, and then we're just going to jump right into questions. Appreciate everyone that sent questions in. We're going to answer all of them. And for those that are voraciously taking notes, we will have notes and like a blog post after this to share, so you don't have to cramp your hand or anything like that. So how about we'll start with GP and then we'll go with Sean and Eric. Sound good?
Great. Well, thank you, David and Hua. I really appreciate you doing this. My name is John Paul Veronese. I've been part of the cannabis space since 1990. My father was suffering from cancer. My mom at the time was president of the Board of Supervisors and was traveling around looking for a cure. While he was going through chemotherapy, she was in Israel and was coming back, and guy said, you should try for nausea, you should try cannabis. And that's what she did. And it worked. And she was able to get the first program at UCSF to use cannabis. And then also what we did was we worked together on Proposition O, which was in 1991. We didn't pass, but we then 6 months later passed Proposition P, which is the first medical marijuana law in history. So we were really proud of that. And then we met people like Dennis Perrone and Brownie Mary, who I worked on with that. They were instrumental in making it happen. Not a lot of people can say their first joint they got from Dennis Perrone, or their first edible they ever got was from Brownie Mary. So I've got that. So I'm really excited about it. But the industry obviously means very much to me. And, we've obviously screwed up pretty well with Proposition 64 in terms of how it's been implemented. We really thought we were going to be able to make a lot of changes. So for the last 3 years, I've been the vice president of Truth Enterprises, which is a B2B company based out of Sacramento. So we do everything but retail. And I also work for ercTree as an affiliate. And I got into the ercTree program through being one of their first clients for Truth Enterprises.
Thanks very much, EP. Hi, everyone. My name's Sean. I am CTO and co-founder at Stronghold. At Stronghold, which we started in about 2017, we have been focusing on enabling digital payments for businesses that operate in highly regulated industries. And so it was natural for us in early 2020 to also enter the cannabis sector, where we do ACH payments for both e-commerce and point-of-sale transactions across the US. In addition to ACH solutions, we have also begun to offer other financial services like merchant financing and rewards program, which we offer. It's been great being able to work with underserved markets. Myself and my co-founder, we were originally looking at remittance I have family back in the Philippines that she sends money to, and it's interesting our transition into, the problems for, underbanked sectors being really, really close to home here in the US, right? And it's great to be getting a little bit of recognition for this as well. We were recognized last year as a Forbes FinTech 50 company. So super pleased to be in this space with everyone here. And I'll hand over to Eric.
Thanks, Sean. Eric Kaufman, COO of FundCanna. I've been in cannabis about 4.5 years. Came in as the first external facing employee at Dama Financial, where I was the chief revenue officer. And we grew that from zero to becoming the largest banking and financial services platform in the industry. But what we saw, or I saw at the time, was that, and it still is, there's a massive need for access to capital. And over the years, as I talked to a myriad of lenders, I was struck that trying to find good people that you wanted to work with, and then people that could understand the cannabis industry and were flexible enough, and the ability to create a credit box that would suit this industry, as well as products to meet the industry, there really weren't any. I came across the guys at FundCanna about 1.5 years ago, Adam Stetner and Ryan Freitas, and one thing led to another, and came over here as COO, and it's been an exciting run. I have a number of products that are built for cannabis, from working capital to vendor financing and cost only. So excited to be here, excited to be a part of solving what I think is one of the biggest needs, and nice to be here with this group of people.
Awesome. Thank you, everybody. So we're going to dive into questions, and there's no order. If there's something that you feel you can answer, feel free to step up. We'll make it pretty casual and informal in that way. But we'll start from a macro. So set the stage for us. We know cannabis raises have been on the decline over the past year. Public markets have been getting beat up. What are you seeing from your positions in the industry?
Well, I'll go ahead and start, if that's all right. So I can tell you, part of my job at Truth was to fundraise, and we were able to be really successful at doing that until about June of 2021. The world kind of changed in our space, and it became very, very difficult to raise money. We looked at all sorts of different avenues, and that's where I came across the ERC and realized that this is not only a great program, it's a really good program for the cannabis space, because it's the only federal help that we're able to get. It actually doesn't say specifically in the program that cannabis is forbidden, as opposed to the PPP specifically said, as well as the EDIL. We weren't able to get any federal help due to COVID. And the ERC became an incredible part for us to raise money, for not to raise money. It's a grant. And it was something that while we were in the process of doing another raise and weren't successful with that, we were able to actually bring in cash with the ERC.
Yeah, who I think, it's obvious capital raises have declined, and on its face, that's a bad thing. But I think there's also a silver lining for a number of reasons. One, capital raises were being completed at truly unreasonable valuations, and that just sets the business and the industry up for failure. And long term, that's not good. And we're seeing the repercussions of a lot of that now, right? It's reverberating across the industry where people just can't meet the unrealistic expectations. Secondly, the easy money is dried up, but that's okay. A lot of times the money that you were taking may have been from investors that just didn't understand the industry or the business. So not only were the valuations not reasonable, their expectations or understanding of the business and how to run it weren't reasonable. Third, equity is expensive, right? And it also forces you to dilute. So while you may have raised a lot of money, you quite likely own much less of your own company today than you did before. And that also comes with a loss of control. So the current environment, I think, is forcing business owners to look at other things, including debt. And debt seems to have a negative connotation, but used appropriately, it can be a very good thing. And you have companies like Apple and Google that clearly have plenty of cash, and even they use debt because it does serve a purpose at the right place in the capital stack. And lastly, I would say that, when you go out and raise money, that's a one-time event. And when you go through that, it's not as if you just reload, right? It's not a revolver. And so that's not necessarily always used to run the ongoing operation. So I think that while it is a tough time in the industry, no doubt, it's forcing people to look at their business in different ways, which is healthy.
That makes a lot of sense. Sean, you have anything to add on that?
I mean, from our point of view on the payments side, looking at the type of, I guess we see the impact of the lack of capital on what we see in terms of our merchant base, right? And the types of things they're looking to do with capital, where they're able to access it. So the plans that they're having and the things they're trying to plan for are very much changing, right? It really is sort of more trying to access capital for survival more than anything else, which is unfortunate, but there certainly are solutions out there for them still.
Yeah, I think what's interesting, before the pandemic in 2020, I'm not sure if everyone remembers, but cannabis wasn't doing that great either at that moment. We were still, all pretty struggling. And it wasn't until the pandemic where we got this extreme lift with essential cannabis that correlated to, insane prices per pound, scale, more investment, it coupled with, even more bullishness within the space and outside the space. So, now last year was kind of when that popped. And we're now looking at an environment where the macro side, we have interest rates that have gone up, inflation, the layoffs, people closing, equity is dried up. We're seeing a lot of headwinds, and almost back to kind of what we were in 2020 with prices per pound dropping, with the illicit market thriving. If anything, the illicit market's thriving even more because it had 3 years to essentially build up their supply chains without necessarily an enforcement. I guess from this lens, where are we going here? How does this landscape either help or continue to challenge us? And how do you expect people to navigate it?
Well, I'd just like to say that, we thought we got some tailwinds with the Democrats coming into office. And, in early 2021, investors were really excited about that, which made it a lot easier to obviously raise money at the time. But, there's always these cycles, going back generations now in terms of where legalization is going to be. And now I think people have come to terms with federal government's really not going to do anything with this for a while. And the consequences of that, obviously banking and everything else, and 280E just kills the industry. And so with that, there are all sorts of hurdles. which is one of the reasons why the industry has to be creative, in terms of being able to sustain. And, just like was alluded to before, it was a time where valuations were just out of control. And now that we're kind of back to reality, there are still options out there and there's still abilities to do it. And consolidation is definitely one of the things that's happening. But, you are seeing in California how regulations on top of the federal government has really gone awry, and the difficulties in that. But with any difficulties, there's always opportunity.
Yeah, I agree with that, GP. I think at its most basic, we need to focus on business fundamentals. Well, as you said, in 19, pretty much everybody got out over their skis, right? You were a dispensary, you didn't care how your distributor was handling your business, so you went out and got a distro license, and you become a distributor. Well, distribution's a fundamentally different business than running a dispensary, right? As is manufacturing and cultivation. So everybody went and got vertically integrated. Then they realized, okay, that doesn't work, right? And they struggled. Then COVID kind of gave everybody a lift, and everybody got a little irrationally exuberant again, right? And now everybody's contracting. But the trend I see are two things. One, people are getting more acutely focused on their core business and understanding what their core really is, and not trying to convince themselves that the shiny object over to the left or right may also fall underneath the umbrella of their core. But secondly, I hear a lot about not just consolidation, but people saying they're going to go out and buy distressed assets, right? They're going to do a roll-up. And you're going, okay, but do you run your business well? And is it profitable? And if your business isn't run well, should you really go out and buy 4 or 5 more, right? And do you think that scale is just going to enable you to run a better business, or does it add a lot more complexity between, the tech debt that you're going to acquire, the people and the culture you need to integrate, and it's challenging. So I see both things happening: people getting more focused, but also another group saying, I'm going to go out and try and roll up everything.
Absolutely. Everyone's trying to chase that sustainability piece. And, obviously we see that everyone targeting that core business for the merchants and that side, but also in the, when we look at our partners or other competitors, the other payment providers, other technology providers in the space, and thinking about things like roll-ups, as you mentioned, Eric, it's really interesting to see who has managed to survive those waves over time, and who has been able to actually get a sustainable business that is able to survive, the next couple of years. So it'll be interesting to see who else falls during this next economic wave.
Yeah, and I think Stronghold's case, you were caught up in like 3 or 2 other cycles, right? You had the crypto cycle, you had the fintech cycle, coupled with the cannabis side, and many people got over their skis on all of it. So it wasn't just necessarily cannabis, right? It was everywhere.
Absolutely, we got hit from multiple angles, and it feels good to have been quite conservative. As soon as COVID started hitting, we were 100% focused just on cash flow. And while that may have slowed down some growth, we're still around despite all those big hurdles to us. So it's a nice position to be in, thinking back, and also positioning ourselves for the next few years.
Yeah, especially because there's so much FOMO leading up to that point. People are practically throwing money in at operators to just be risk on. And I think now we're risk off. And when in a risk off environment with investors, they're looking for sustainable cash flows. They're looking for solid business models. They're looking for yield that doesn't they can guarantee, that are pretty much guaranteed in a lot of ways. And then there's others that think with downturns is the best time to build a company, because that's where you're going to get the most upside. And I think there's a lot to be said around cannabis still being pretty early. We've been through a few cycles now, and we're kind of building into this potential recession or in these headwinds. I guess we can shift into sort of what can these operators do? How can dispensaries or other people in supply chain think about getting access to capital and cash at this moment? And in the short term, or if there's more midterm solutions. But I think that people on this call are looking for, what can I do today? How can I shore up my balance sheet, as fast as possible? And I guess we'll start with GP and go to Eric, and then we could probably talk about the merchant processing side with Sean after that, if that makes sense.
Okay, yeah, well, if whatever company has not looked at ERC and doing that for your company, you should. And cannabis companies, everybody thinks, oh, because we're an essential business, we don't qualify. I've heard all sorts of things. We've qualified so many cannabis companies. And in fact, like I was saying before, we don't have the PPP. So cannabis companies are actually getting the highest per employee value that you can get. And you can get up to $26,000 per employee. So, I mean, you got 10 employees, that's potentially $260,000. You do the multiplier on that for 100 employees, and you're sitting at several $1 million that you could get. And it's a situation where there's so much misinformation, and this is something the government wants to actually get into people's hands. We're seeing people getting this cash within 55 days. I just had one yesterday that got it in 55 days. So this is very, very meaningful. And it's a great source of cash, because it's not like the PPP where they tell you what you need to do with it. You literally can do whatever you need to do with this. You can pay back taxes. You can, hire more people. You can buy it, but whatever you need to do for your business, there's no restrictions on this money.
Yeah, and just a shout out. GP helped Meadow get our ERC. So we applied in December. We caught back up in Vegas a little bit and applied in December, and we're have a substantial amount of cash coming to us in the next few months, non-dilutive, and we'll go back into the company and paying our employees and keep it going.
Yeah, and it's made a huge difference for our business. I can tell you that we've kept people employed for it, which is the purpose. But it's very simple. It's just a matter of what you've paid in payroll taxes, you get back. And there are also other ways that you are able to get your premiums back for healthcare. And it's really something that is substantial.
Yeah, that's awesome, GP. Thanks for doing that.
Yeah, of course. And like we said, we try to make it very easy. We're like the lending tree for ercTree, and we love it for people to explore their accountants or anybody else. Use us as an option. And just for your business, if you're not doing this, you're doing a disservice to your business. So you should definitely do it. And for us, we had our CPA do it, who didn't specialize in tax credits, and we literally got more than double than what she thought we could get. So please, definitely, if you don't use ercTree, use a specialist in tax credits. It's crucial.
Yeah, and so that's sort of like a midterm. You got anywhere between 60 to 90 days plus. Eric, your model has pretty much instant deployment, within 24 hours. Can you talk about sort of how you guys are doing what you're doing?
It was a very good transition, Hua. Very organic. I like it.
Yeah.
No, well, I think first, look, going back, you were talking, about some things that were going on earlier. When the environment changed, investors changed, right? And they went from growth at all costs or no cost, didn't matter, to, oh, you got to break even, right? And that changes an operator's business overnight. So I think, at all times, focus on running a good business, irrespective of the environment. And Hua, we talked about this a little bit before, that they, and I'm not saying it's just because you're the host, but Meadow was always very focused, right? They never got style drift. They weren't chasing the next shiny thing. As we were talking over the years, we're going to stay in California. We're going to stay in California. Once we get that to where we want it, then we'll move forward. You didn't go after all 39 states at once with the shotgun approach. So, I think there's, a lot that makes a lot of sense. We can leave it at that. In terms of access to capital, again, I think this is a good time to look at debt, even if it's a bit more expensive relative to the non-cannabis industry. Equity is far more expensive than you even realize, and debt is probably less than what you will have to give up if you went to raise equity right now. And likely you're raising equity on a down round, given the state of the economy and the cannabis environment, which you don't really want to have to do. Also, I think the debt providers in the industry today, I know we at FundCanna we really do try to understand your business and be a partner. I don't want to be a lender of last resort. I want to be a lender that gives you access to capital to enable you to grow, to facilitate growth, to pay your vendors, to buy the raw materials so you can fulfill an order, right? And so we don't want you to get overextended. We want to help you run and grow your business. So yes, if you apply with us, typically within 24 to 48 hours, we could turn the file around and you have the cash in your account, next day.
Yeah, you guys have a unique model where you're charging per pull, right? And monthly interest rate, where you're not necessarily trying to get a full term. These are pulls that you can use to smooth out your cash flow, right?
Yeah, so let me explain. So it's short duration lending. So think on average 8 to 12 months. We pull every week. So your payback are kind of called micro payments. So it never feels like too big a lift, right? So every week you're paying back a little bit. And say you were approved for $500,000 and you pulled down 100 grand this week to make a payment to some of your vendors. Next week you pulled down 50, the following week another 150. Well, each one of those pull downs is on its own amort schedule. So as you pay them down and pay them off, you can reload, and it's basically a revolving line of credit, so to speak, but each one is its own. So it gives you a lot of flexibility to use the money as you need it. There's no prepayment penalty. There's no penalty for non-use. Again, we're trying to be your partner, not a lender of last resort. The other thing to point out with debt just generally is when you pay it off, you still own your business, right? We're your finance partner while you borrow the money. And then once you give it back, the company is all yours. We're not taking any ownership. And I think particularly from an entrepreneur's perspective, that's a good place to be.
No board seats for you.
No.
Sean, you guys have some lending as well, and you've built a lot of the payment tech and all that. Can you dive into sort of those solutions that you've sort of created and have right now?
Yeah, absolutely. So we started off with embedded payments, e-commerce. It was a great time to be looking at e-commerce during the COVID outbreak right at the start of March 2020. Converting that cash into digital payments was a no-brainer. We since moved to in-store as well, which is a little newer, but as customers want to be in store again, that was the next place to start displacing cash. And that's really what we're doing. We're trying to displace cash as much as possible. Some of the benefits that has given us is, having easier reconciliation, accounting, transfer of money. You're not dealing with cash transport, things like that these days. It really has opened the door to some, financing methods, right? We found that underwriters of our, financiers of our merchants found it much easier to get their head around the way that the money settled into their accounts, for instance, and also the potential to be able to collect maybe a percentage of those incoming settlements, de-risked the whole lending process to them. We eventually decided to launch our own merchant financing program because, we already have the relationship with the merchants. They've been processing payments through us for, X number of months. I think at least 3 is our minimum. We know what your volumes look like. We have an idea of what other payment might be going through you. So, we sort of have all the digital data ready there to very quickly underwrite our merchant customers for, essentially, it's a merchant cash advance. So, given your historic payment volumes through us, we can advance you, some time period, projected time period worth of your payments going through us. And from that point onward, we will just deduct a certain amount of your net settlement. So, we might say, okay, let's project out what the next 6 months of cash flow looks like through Stronghold. We will advance that to you now, but we're going to, hold back, say, 15% of your daily settlements going forward. So, really easy to digest in terms of how that's going to work on the accounting and the cash flow side. Much like how, it sounds like FundCanna is working, so we're not taking those big hits. And again, it's debt at that stage. We're not taking that equity piece either. So it works a little differently because it is, working through our payment piece, but that's what makes it so easy for us to be able to offer to our merchants.
Yeah, it makes a lot of sense. I love the fact that, starting to pay it back immediately, when you have it, and de-risking your portfolio. Because I think, this being high risk, what we're seeing is a fair amount of defaulting from other operators that have gotten loans from, various groups. And, with that default, some of those contracts are written where you're actually ceding control. Maybe it's a conversion to warrants, or conversion to, some sort of model to seize control of the company. I guess when you're doing the qualification, how do you think about de-risking, and what type of demographic are you looking for? And then, should someone default, what are the consequences of that?
So for us, we're interested in that core business piece of what are the payments going through, your dispensary. It all comes down to cash flow for us. We want to see that, a certain amount of that is going through Stronghold, because obviously that's the easiest for us to, make those repayments on, so that we don't have to collect money, on the side. And we want to see some history with us. It really just comes down to those two things, and we can project from there. In terms of defaults, and certainly we're not immune to having seen defaults, having run the program for, I think, about 18 months now. The good news for us is we do start, getting that capital back immediately. So that certainly has helped. But for defaults, we have UCC filings. But in terms of default, we feel like our underwriting, again, has been quite conservative, right? Thankfully, we've been able to offer most merchants who go through basic eligibility with some amount that they've, asked for. But we still have been on the conservative side. So we haven't had defaults that we found worth, pushing really heavily, because it would actually just take focus away from us in other places. But we do have, liens on certain property, but there's no sort of warrants or conversion or anything tricky or, hard structurally like that in our program.
Cool. Eric, what about you?
Sorry, I couldn't get off mute. So we offer unsecured loans, and the most basic is we look at your gross annual sales. Obviously, some other things fall into it, but we try to keep it pretty simple and streamlined. And no different than Sean, we try to be conservative. It comes down to underwriting. We have an incredibly low default rate. Adam, who comes from about 20 plus years in SMB lending, which is also considered high risk. Unbeknownst to me, traditional SMB only gets approved at 20% from traditional financial institutions for loans, so incredibly low. So there's big marketplace out there, and our default rate here in cannabis is much less than traditional SMB. So I think it's just being diligent, and you're not just underwriting the business, you're also underwriting the people, right? And so you get a sense for who it is that you're working with.
Got it. And so the consequences on the default.
So we have a UCC filings as well. Obviously, one of the reasons, generally speaking, capital has been expensive for this industry is a few reasons, right? No bankruptcy protection, federally illegal. But let's also remember, as you alluded to earlier, it's a new industry. And yes, we've been through a few cycles, but relative to any other industry out there, excluding maybe crypto, this is, we're in the beginning stages. So there's not a lot of history and a track record that you're underwriting against. So it really does come down to, I like to think our industry is still relationship based, right? It comes down to a lot of that. And
it's weird though. I think what we're seeing in California is this massive debt bubble that's been built up between the distributors and the dispensaries, and the distributors' clients upstream, the manufacturers, producers, brands, and whatnot. And essentially, brands, manufacturers, cultivators have acted as a lender on terms for their product to the dispensaries. And if the dispensaries fall into a cycle where they can't get that payback upstream, then no money goes back up to the operators there. And so a lot of these are built on relationships, but there is no consequence for not necessarily paying that, because there is no, this is not like alcohol where you can like have someone's license suspended or have them put on a blacklist or something like that. This is just, sorry, we don't have the money, and and so be it. And yeah.
Well, two things there. We're starting to see an unofficial blacklist start to circulate. People you're starting to understand who I don't want to call them bad actors are, but delinquent actors, right? And eventually that's going to catch up because they'll just stop doing business with you because they can't afford to float you anymore. I think, moving the excise tax to the dispensary, which they've effectively been using as a line of credit because they're letting the distro pay it for them, and then they're just paying it back whenever they want, right? That there's a reckoning coming there. And so I think this is going to be an interesting year where a lot of that does shake out.
No, it makes sense. And that's why I think, your solutions that you're presenting are timely, because these other options are pretty much exhausted and may not be, viable. I guess, moving on to sort of, misconceptions. There's so much, I don't know, shenanigans, or there's so much like myths around some of these different value props. I've heard a lot around different ERC options or lending or even like payment processing. What are some of the things that you can help dispel for people out there with your respective value proposition, what you see out there? Like, so, what are the standards that you set? How are yours offerings different from others? How do you sort of set yourself apart from a lot of the noise that's happening?
Should I go first?
Yeah, please.
I can talk about ERC. So I can tell you when I went through the process for Truth to see what company we should use. First of all, our accountant kept saying for 4 months that we don't qualify. So I knew that she wasn't the right way to go. And there were a bunch of companies out there. I almost talked about 20. And what I loved about ERC is they have 3 of the top accounting firms that specialize in tax credits, that have the insurance, that have been around forever. Some have been around for, I think one company's been around for 28 years just doing tax credits. And they also do audit protection. All these other companies, most of them are pop-up companies that haven't been around and that probably won't be around much longer. So it's really important to whoever you're working with, you get audit protection. It's a situation where, when you look at what's out there, and there's so much misinformation, and this program has changed several times, which really opened it up. So everybody thinks it's still a program based on revenue loss. That's just one of the criteria. And they even changed that from 50 to 20, but it's really just a 10% change, not revenue based, but a 10% change due to COVID in your operations. I mean, we had to move all sorts of things around. We had all sorts of supply chain issues. We were easily being able to fulfill that. So you just got to be really, really careful. All of our accounting firms have Circular 230, which you don't want to use people that don't specialize in this, and you don't want to use people that just got in this game because they think that they can get a fast buck or what have you. You want people that are going to be around and that are reputable.
Makes sense. Yeah, I think another area that is qualifying is just the lockdowns. If you've been in an area with a lot of lockdowns and you had to rework your whole supply chain and work remote, that qualifies.
Oh yeah, and so everybody thinks too, cannabis was an essential business, it stayed open. No, but California had some of the harshest lockdowns around, and it affects your business. i.e., retailers, they had to now not utilize their space indoors, and we're doing deliveries outside. That right there alone is a dramatic change in your business model, and people not being able to go into your store. So really the cannabis space, regardless of it being an essential business, is really positioned well to receive ERC.
That's great. What about Sean? Payments. Dude, I get literally an email like every hour, it seems like, on someone wanting to do an integration with payments, or someone that has found a credit card solution, or someone that has like a crypto blockchain, so. I mean, help us get some clarity on, what's happening out there with payments, and, also like without safe banking and all that, what we're dealing with here.
Yeah, it's funny to me that is still the case, that people are creating these ad hoc, very temporary and very clearly not compliant solutions and pitching them around.
Well, yeah, because the
Yep.
cashless ATMs went away like a couple months ago, and so there was a whole nother surge of people coming through.
New hacks, right? And I mean, we were warned by Visa a whole year out that they were going to start looking at that space, and I know that there's temptation to sort of ride that gray line. We have a very deep cryptocurrency past at Stronghold, and so one of the things that sometimes we get asked is, is there crypto somewhere in the back of our product? Absolutely not. It's not useful at all for this particular use case. Just don't even try it. We have stuck to that very conservative approach of just get very strong banking relationships and do what is clearly compliant, right? And that's the ACH processing. We're always asked, oh, can you support cards? Can you do debit? Can you do credit? And of course, we're always looking at those sort of things. But until we find a solution where we have, that sort of safety and compliance all the way through from, transparency with the banking partner all the way through to the integration, we won't launch it, right? Because it just does not make sense. Otherwise, our partners will be wasting time on integration, right? And we don't want that. Engineering is obviously expensive. We don't want to do that. But it's really the reputation, right? And it goes back to that piece of who's still around, who's got the sustainable businesses, who's doing things maybe subjectively, but correctly, I'd like to say. And so our focus is on that, just making sure that whatever we're sending out there is built to safe and stay around long term.
Yeah, it makes a lot of sense. It's there's just so much noise out there when it comes to payments. Eric, I mean, you've done both. You've done the payment side, now you're doing the qualification side. What are some myths or things that you're seeing out there with respect to value prop that you can help dispel?
I think you're just happy I'm not calling you for an integration anymore. So
and yeah, exactly.
Now he takes my call. So look, I think, on the lending side, the marketplace or the providers out there have gotten a lot better. There are a lot better options than there were, going back to every few months in this industry. It's like dog years, right? So it changes and evolves so quickly. So I think there, what we try to do is be a partner and understand what you're trying to achieve. That's really important, right? And while we started with one product, which was just working capital, right? Here you go and do whatever you want with it, which is great because a lot of people want that flexibility. We're also trying to develop products that are specific to cannabis, because I think, like we all know, this industry it's not analogous to anything else out there, right? So yes, we have vendor financing, which is great, but it's got its tweaks to fit what this industry needs. And so with our vendor financing, we'll pay your third parties directly. Again, we have the working capital, we have the cost of capital. So for a period of time, you're not paying down the original principal. We have equipment financing for the operators, but also for the vendors to help them sell more to the operators. So you could tap into it any one of a number of ways. So I think, things to look at if you're going to borrow money, is it asset-based? Or is it unsecured? And is it just predicted on cash flow? Really get an understanding, command of the repayment terms, not just the factor or the interest rate, but also the duration. Are there any prepayment penalties or non-use penalties? And so you just really want to understand what you're getting into so that something you think is going to be a good thing actually turns out to be so.
And what about the personal liability? Is it just attached to the business, or is there some personal liability on that, or guarantee, anything like that?
Yeah, we require personal guarantees. It's because there aren't other protections for this industry that you would get in non-cannabis related industries. We do require personal guarantees. I think, in the early days, people were really hesitant to do that. I don't really find that as a barrier too much anymore. People are a lot more willing to do that. So, but yeah, that is something we require, but we also offer the loans unsecured, and it's a quick turnaround time. So it's a
Yep.
nice trade-off.
Got it. Well, I mean, especially right now with even just dispensary operators with excise tax, that excise tax, you're now personally liable for it. You can't claim bankruptcy on your business. So even if you close it down, you're personally liable for that excise. And I think there's these taxes that are or have been implemented are burdensome and will continue to be burdensome both on the business level and personal level if you don't have this dialed in.
Yeah, I
And
mean, we said we talked a little bit about it earlier. Look, the taxes are egregious, right? But they are what they are right
well,
now.
the fees are even more egregious, right?
Yeah.
So it's like if you owe these taxes and you can get a short-term loan just to pay it off, you're gonna save yourself from an insane amount of fees that get tacked on. So it's sort of like, moving the interest rate around to get a lower, fee at the end of the day.
Yeah, and I think dispensary operators have been using as a float or a line of credit because they didn't have to front the cash. Right now, that's going to move to their book, and so I think you'll see a change in the way they operate this year because they can't just ignore it like they have been with their distro partner.
Yeah. Well, I think even more complicated now is that it's not just getting the cash, it's are you calculating it correctly? With the different compounding that's available with different jurisdictions and the order of operations, it can quickly become hundreds of dollars a day that you're not doing it right, and over a course of a few months, and then a 50% penalty on it or something like that, it can get pretty out of control. But yeah, I guess we're getting toward the end of this, and I'd love to start maybe some advice or some perspective of what are the successful operators doing? As you're looking at people that you speak with, the ones that are moving forward, what are the characteristics that they have? What are they doing in terms of their strategies or their cost cutting or growth that people can learn from, especially as it relates to their cash flow and their business model?
I mean, go ahead, GP.
I was going to say specializing. I mean, it comes down to, even though Truth does everything B2B, we realized, hey, we started working with a logistics provider. We started doing things where we really honed in on our brands, which was, something that was really working for us and gravitating in the marketplace. And it's difficult to do all these verticals. It's difficult to grow. It's difficult to manufacture. It's difficult to do logistics. To think that you could do all of them, is for us. We started realizing, hey, we took on a lot, and we thought we were being like conservative. Oh, we're not going to get into retail, right? We want to have those be our customers, and we thought we were doing a good thing by staying out of retail. But the reality is, it was very, very challenging doing all three of those.
Yeah, I agree, GP. I was going to say essentially the same thing. Stay focused, right? Being vertically integrated it sounds alluring, but it's really difficult to execute all of those verticals at once because they're fundamentally different businesses. So stay focused and don't chase the shiny object. We have enough examples out there as to how that can not work out well for you.
I'm a data guy. I love those numbers, and I think something we're seeing is, thinking about the dispensaries being our customers, the ones we see having the most success, or the ones being able to manage some of the issues that they may have recently come into, are the ones that have solid accounting teams behind them, right? And it might be one person who's not even full time, but the ones that are able to get a handle on all the different methods of financing that we've talked about here, getting through all those tax complications. And of course, we're seeing a lot of that at the moment. But also simple stuff like, are they, actually reconciling their books on some regular cadence? Are they getting the right information from, their point of sale? The ones that have all that sorted out, we see are in the best place to make informed decisions about, how to go about their finances in the next few months. and, you know, aren't getting themselves into a place where they're, you know, tripping over more and more penalties and fees and, you know, trying to, you know, solve issues in their books from, you know, a year ago. So I think that's been the biggest indicator to us of a good operator.
What about the operator that has just had some maybe terrible luck and like a partner left and fleeced them with all this debt, or raised at a crazy valuation and now is underwater on, you know, their valuation? You know, in terms of sort of like moving forward, is there a way to dig yourself out of this hole? Like, how does this, you know, what strategies do you see there? Is it, you know, rework your cash flow model, rework, you know, pay down your debts piece by piece, you know, call a day, throw in the towel, or, you know, what do you see there?
No one wants that one, do they?
I mean, it's the reality of the
Yeah.
situation for some people, right?
And I think each situation is so specific, but it's, you know, can you shed assets that, you know, that you don't need, or even if you do, can you do without, right, to get out from underneath that burden? Can you find good new partners? You know, unfortunately, we've seen, at least I have anecdotally seen so many partnerships that were great when things were going well, and then as things got challenging, they just it unraveled. It's sad to see because a lot of friendships came to an end, but I've seen a lot of that. So you know, and also don't be afraid to ask for help, right? There was we've all been humbled, so you know, you can't go it alone. You know, so reach out to your contacts and see who can be of assistance to you, whether it's just through, you know, emotional support or you know, a good introduction or capital.
Any other advice on digging yourself out of a hole?
You know, from our point of view, it really just is about, can you might have all these skeletons in the closet, and that's fine to some extent, depending on what they, you know, happen to be, maybe. But as long as you can, you know, sort of take a step back and restructure and show that, hey, you've got customers coming through the door, you can make cash flow. There's going to be someone that can offer you, you know, a way to you know, step out of that. But you know, one thing that I think is really hard to show or is hard to present is going to come back to that data. You know, can you present that story in a way that is, you know, going to look good to an underwriter? And that's not always easy when you've got lots of disparate sources of data, especially if you've just come off, you know, one system and you're transferring onto another. That is a hard story to paint for someone trying to underwrite you.
Yeah, and I'll say it's, you know, it's a hard question because obviously it's based on different circumstances, but you know, I love this industry. I love the origins of the industry. And there's so many good people in the industry, but there's so many people that are doing positions that are in the wrong seat. And it's always a very difficult thing because I've seen a lot of, you know, friendships that get into this industry and people doing roles that they should not be doing, or people running the company that should not be running the company. And it's a hard thing to look in the mirror and say, you know, you know, this is not the role that I should be doing. And it's, you know, it's also a situation where people have gotten into, you know, bad agreements and just misunderstandings, and like you got to be able to have clear set roles in terms of where, you know, you are with your company. And this is, you know, it's one of these strange things to talk about, but you know, before this was legalized, you know, people were doing it that, you know, when it wasn't legal, and now they're on the regulated side, and it's very, very tough because obviously, you know, it's no secret there are companies working both sides because that's quite frankly how they're paying their bills. You know, it's like I either, you know, pay the taxes with other means, or you know, I go out of business and I got a huge tax debt. You know, it's a really sad state of affairs because obviously I've had a lot of friends that have gone out of this business and have had hard conversations with people that are like, should you really be the CEO of this company? You know, should, you know, so anyway, so that's just a tough question to answer. And it's obviously scaling down has been really tough for the industry, and we've all had to do it. And that's never a pleasant thing. But what you see though, is you see the companies getting a lot more efficient and realizing, oh my God, I really didn't need all these people. And you know, it's I'm a better company for it. And just like we were talking about earlier, now that the money's not easy, and it's never really been that easy, but there are people definitely throwing around money earlier. You know, you got to look at where you're spending your money, and it's got to make a lot of sense.
Yeah, and you know, in some of that debt or even the relationships and the partnerships, there was always room to negotiate down, right? There's a way to rework the agreements, to, you know, rework the equity, rework the debt. You know, hey, I'll pay 10 cents on the dollar and just get this off my books, and you know, and have payment terms around it. You know, whatever that is. So, you know, we have a few questions here from the audience, and this was really around like cash management, buying practices, managing credit terms with vendors, improving day-to-day ops, basically cash flow. Like how do you think about cash management best practices? And what's the best way to sort of like think about implementing those best practices and incorporate what you guys have or any other tools that you've seen?
Well, I'll just say from my experience in dealing with a lot of different cannabis companies, you got to know your numbers. I mean, start with the fundamentals. Like you gotta, you know, you gotta have your, you know, if you're able to have a CFO or a controller or somebody in finance that are giving you the numbers on a routine basis. It's amazing that I would ask companies, you know, for their financials, and they literally don't have any up-to-date financials for a very long time. So, you know, having systems in place where you're reconciling and you're, you know, you're also, you know, planning, you know, doing proper forecasting and having an actual annual budget. So, you know, a lot of companies that I've tried to help out where I'm like, okay, well, let's go. What's your budget look like for next year? And they're like, for next year, like, I haven't set any budget for next year. I mean, so for me, unfortunately, I've just saw a lot of things that simple fundamental things that weren't in place that obviously made it very detrimental for the company.
Yeah, and for that, I think it actually really helps with the emotional piece. I think a lot of these numbers or lack thereof can get very emotional versus when you have these metrics in place, you can look at it way more arm's length to figure out a way through.
Yeah, well, like KPIs, I would be like, oh, so what are your KPIs? And they'd be like, KPIs?
Yeah.
Like, I'm like, oh God,
Yeah.
we've got an issue.
But I think it goes back to what Sean said, and David, you're alluding to it, is data, right? Let the data dictate what you do. You know, if you've been around long enough, you don't need to guess anymore, right? You have enough information. You just have to make use of it.
The great thing about having that data, and it doesn't have to be too heavy and in depth, it can be, you know, very broad brush categories, is you can quickly see what you have to change to get to that happy story at the end, right? Because that's what it's all about. It's not about necessarily worrying, and you were mentioning this, Hua, but you are trying to project into that good path, right? Because, you know, with our customers that we're working with, especially on the financing side, if we're underwriting them, they've given, you know, they've shown the story and they're going to make it out, you know, 9 times out of 10.
Yeah.
Right. It doesn't have to be the sort of horrible process where everyone's, you know, running out of money. That's absolutely not what it's about.
Yeah. Okay. And this is the last question. So this is from Terry around just the illicit market and how entrenched it's become in the existing market that we have with, you know, 64. There's so much sales in the black market, or sorry, illicit market. How does that affect price, supply stability, and thus investment in, you know, these operators? I guess the question really is around, you know, for the licensed operators, how do you navigate with the illicit market, knowing that it continues to grow. And, it's a big source of competition.
Well, it's a major issue. I mean, because obviously that is the real competition. We can talk about taxes, we can talk about regulation, we can talk about the difficulties of running, a business. But when your competitor is able to have the same product at a significantly less price and no enforcement, it's kind of an issue, and how do you defend against that? It's tough. It's very tough. And obviously we've had a lot of lip service from the government in terms of how they're dealing with it. It's just, there's not very much happening on that front. And it is what it is. And it's just the reality. We're competing with competitions that's not playing by the rules and is able to undercut us on price. And the future doesn't look in the short term very bright to be able to compete against them.
It sort of goes out of my area of expertise, but one thing that we definitely see a lot of the dispensaries looking at is just how do we improve that customer experience? Mm-hmm. Right, it all comes down to that. Yes, can't compete on price, but what else is part of that customer experience of someone buying products? And there does seem to be some interesting initiatives there that could prove useful, but that seems to be one place to look at for sure.
Well, and I'd have to say too, is it's crazy some of these illegal operations, how good they are at customer service. I mean, these delivery companies, I mean, it's wild how good they are, and they're prevalent. And yeah, it's a very tough question that we're going to be battling with for quite some time, and it's such a bizarre thing to talk about, because you would think the government would want their tax money, and that was always kind of like, that's they're going to make it difficult for the illicit market, and obviously we're not really seeing that.
Yeah, I mean, the customer experience is definitely really important, and I think what's really important to me, like when I shop, is like the freshness, right? So your inventory is your cash. How you manage that inventory is of the utmost importance of getting things moved correctly, and not necessarily over discounting, but getting the product in the front of the right person at the right time. That a lot of that can be done within your point of sale. A lot of that can be done through your reports. If you're not doing that, then you're just shooting yourself in the foot day after day and not getting the loyalty of your base. You can only go after and acquire new customers every so often. The ones that keep coming back and back are the ones that really sort of give you that stability. Cool. Eric, do you want to add anything to that, or we're good? All right.
I'm good.
All right. Solid. Well, thank you, everybody. I'm going to turn it back over to Aria. This was really helpful and informative. Hope everyone got some value out of it. And, we're all here at your disposal. If you have any questions about any of the value props that we presented, we'll reach out. For those that filled out that you want a personal consultation with me, I am going to be following up after this webinar, and we'll try to get you some cash and hopefully move you guys in the right direction. Thank you.
Yes, thank you so much, Hua, Eric, Sean, GP. Really appreciate your time and energy today. And thank you to everyone for tuning in. We will be sending out this recording to everyone who registered, so keep an eye out for that. And if you have any questions, feel free to reach out to Hua. His email there's on the screen, david@getmeadow.com. Thank you so much. Be well, everyone.
Thank you.
Bye.
Thanks, everyone.
Thanks.